السلام عليكم.
عليكم السلام ورحمة الله وبركاته.
وعليكم السلام ورحمة الله وبركاته.
How are
वालेकुम
you, brother?
अस्सलाम वरहमतुल्लाह।
Assalamu alaikum, brother Arshad.
वालेकुम सलाम उमर, हाउ आर यू?
Alhamdulillah.
وليه دكتور عمر؟
Ali, I think we have reasonable attendance. So at 12:05, 10:05, I think it's
Yes,
10:05. So we should start. We already
we can
waited.
start the session. Yes, inshallah. Bismillah ar-Rahman ar-Rahim. Ladies and gentlemen, distinguished participants, Assalamu alaikum wa rahmatullahi wa barakatuh. It is indeed an honor and a great pleasure to welcome you all in today's public hearing session on the exposure draft of the Governance Standard Principles of Assessment of Necessity for Obtaining Conventional Reinsurance by Takaful Institutions. We are holding this public hearing in collaboration with the General Council for Islamic Banks and Financial Institutions, SIBAFI, Bahrain Association of Banks, and UAE Banks Federations. Now, please allow me to brief you about the agenda of this session. The first 15 minutes are allocated for the welcoming remarks, and then Mr. Umar Mustafa Ansari, the Secretary General of AOFI, will start the discussion on the exposure draft, and we should conclude at 12:30 Bahrain time. And we hope that the session will be productive, inshallah, for everyone. Now, for the welcoming remarks, I would like to invite Mr. Hamza Bawazir, the Secretary General of Sibafi, to deliver his welcoming remarks. Mr. Hamza, the floor is yours.
السلام عليكم ورحمة الله وبركاته.
السلام ورحمة الله وبركاته.
بسم الله
वालेकुम
الرحمن
अस्सलाम।
الرحيم. الحمد لله رب العالمين والصلاة والسلام على أشرف الأنبياء والمرسلين. Excellencies, distinguished representatives of regulatory authorities, esteemed scholars, respected industry leaders and partners, it is a profound honor to welcome you on behalf of the General Council of Islamic Banks and Financial Institutions. Today's session is a testament to the power of collaboration. Sibafi is proud to stand alongside our partners, AYUFI, the Bahrain Association of Banks, the UAE Banks Federation, to facilitate this consultative process. I would like to take this moment to specifically recognize and praise AYUFI, represented by its Secretary Dr. Umar Al Ansari, and his professional team for their tireless work and visionary leadership. Their efforts in developing robust Sharia and governance frameworks are the bedrock upon which our industry stands. At Sibafi, we remain deeply committed to collaborating with AYUFI to advance the global agenda of Islamic finance. However, standards only achieve their purpose through action. It is imperative that the industry endeavors to implement AYUFI standards on a good faith basis. This commitment is the primary vehicle through which we will achieve true harmonization and advance the Islamic finance industry to its next stage of maturity. The Takaful sector has shown remarkable resilience and growth, yet we find ourselves in an increasingly volatile global environment. The ongoing conflicts in the Middle East have significantly disrupted the reinsurance landscape, causing capacity to tighten and pricing to rise across specialty lines like marine and aviation. For Takaful institutions, this volatility exacerbates an existing challenge. the limited availability of Takaful capacity. This has led many to resort to conventional reinsurance under the principle of necessity, as outlined in AAOIFI Sharia Standard 41. Without a clear framework, this practice risks becoming a default rather than a last resort, potentially compromising Sharia integrity and industry reputation. The exposure draft we discussed today provides the how behind the why. It does not seek to create new principles, but rather to reinforce the methodology of decision making. Key features include clear criteria, like defining what constitutes true necessity, exhaustive alternatives, like mandating the exploration of retakaful and co-takaful arrangements before looking elsewhere, structured oversight, like defining the specific roles of management, governance authorities, and Sharia supervisory boards, transparency, like ensuring that decisions are documented, time sensitive, and accountable. The purpose of this hearing is to ensure that this standard is shaped by your practical insights and market experience. We seek your feedback on how to effectively define and document necessity in practice, ensuring that also ensuring governance roles are sufficiently strengthened to vet alternatives, also maintaining the standard's responsiveness to extraordinary market disruptions. Lastly, I say, in a world of geopolitical uncertainty, a governance framework that is both rigorous and responsive is exactly what our industry requires. By engaging with these standards in good faith, we ensure that our institutions remain principled in their foundations and resilient in the face of future challenges. I invite you all to contribute your insights actively. Thank you for your commitment to the integrity of our industry. Wassalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum assalam wa rahmatullahi wa barakatuh. Thank you so much, Mr. Hamza Bawazir. Now, I would like to invite our special guest in this session, Mr. Muhammad Arshad, Director, the Securities and Exchange Commission of Pakistan, to deliver his welcoming remarks. Over to you, Brother Muhammad.
First of all, thank you very much. We appreciate the initiatives taken by the Accounting and Auditing Organization for Islamic Financial Institution in issuing the exposure draft for the governance standards titled Principle of Assessment of Necessity for Obtaining Conventional Reinsurance by Takaful Institution. The development of such governance principle is timely considering the operational realities faced by Takaful institutions in many jurisdictions. In the context of Pakistan, an important development has occurred following the landmark judgment of Federal Shariat Court of Pakistan in May 2022, which directed the elimination of riba from the country's financial system by December 31st, 2027, thereby mandating a transition towards a fully Islamic financial and economic framework. In compliance with this directive, the SECP has initiated steps to facilitate the transformation of the insurance sector by advising the insurance companies to submit transition plans for converting their existing conventional insurance business into Sharia-compliant Takaful operation. And we are in the process of developing guidelines on entering into conventional reinsurance arrangement by Takaful operator. However, it has not yet been finalized and under consultation with the industry stakeholders. During this transition process, the insurance industries in Pakistan raised an important concern regarding availability and the capacity of re-Takaful arrangement. If the conversion of the conventional insurance to Takaful take place at scale, the industry may face significant constraints in obtaining adequate re-Takaful coverage, particularly for large or specialized risks. I would also highlight over there the growth that has been taken place during the last couple of years in the Takaful business, which are reflected by that the sector recorded year-on-year contribution growth of approximately 24% in the general Takaful segment and 37% in the family Takaful segment. That is reflecting increasing demand for Sharia-compliant financial protection solutions. It is already recognized that in some markets, the limited availability of re-Takaful providers leads the Takaful operator to resort to conventional reinsurance under the principle of necessity, that is Zarura, within the parameters of Sharia standards. Considering this, we respectfully request IOFI to consider the implication of large-scale industry conversion scenarios such as one underway in Pakistan while finalizing this governance standard. In particular, the guidance would be beneficial on number one, criteria and threshold of determining necessity in obtaining conventional reinsurance when retakaful capacity is insufficient. Number two, industry-level solutions including phased transition arrangement and development of global retakaful capacity. Third, the guidance on transitional framework for jurisdiction moving from conventional insurance to a fully takaful-based system. IFO guidance on these matters would greatly assist regulators and industry participants in ensuring that the transition towards Sharia-compliant insurance ecosystem is practical, orderly, and aligned with the objective of Sharia while maintaining adequate risk protection for the policyholder. Thank you very much.
Thank you so much, Brother Muhammad Arshad. Now, for my welcoming remarks, I would like first to brief you about the exposure draft of this governance standard. AOFI Governance and Ethics Board issued this exposure draft in December 2024. So this standard sets out the fundamental governance principles and internal controls that govern the situations under which the Takaful institution may utilize the conventional reinsurance as a means of managing the risk under the basis of necessity. So this standard provides governance principles and internal control in order to ensure Sharia compliance. Now, for the public hearing session, I would like to highlight that this is the third public hearing being held in English, and another public hearing should be held in Arabic in the upcoming months before finalization of this standard. I would like also to emphasize that the whole purpose of AOFI's public hearing sessions is to benefit from your experience, your knowledge. Therefore, all your comments, questions, suggestions are welcome, and we kindly request you to present them and submit them in the Q&A tab rather than using the chat window. This will allow us to compile all the comments in one place. After completing the public consultation stage, we will compile all the comments and the questions and we will present them to the relevant committee and AOFI Governance and Ethics Board for further discussion and deliberation before finalization of this standard this year, inshallah. One last thing I would like to highlight is that the presentation that will be presented in today's public hearing session is exactly same as the exposure draft that is available on AOFI's website. And we will share with you the link to the exposure draft to either view it or download the exposure draft. Now, without any further delay, I would like to welcome Brother Umar Mustafa Ansari, the Secretary General of AOFI, to start the discussion on the exposure draft. Over to you, Brother Umar.
Thank you very much, Sister Alia. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. Ladies and gentlemen, distinguished guests, Assalamu alaikum wa rahmatullahi wa barakatuh. Before I go to the standard, I would like to particularly thank our supporters today, particularly my very respected brother Hamza Bawazir from Sibafi and the Bahrain Association of Banks and UAE Banks Association, as well as my dear brother Muhammad Arshad from the Securities and Exchange Commission of Pakistan. We are so much thankful to all of you because presence of these institutions in supporting this public hearing initiative speaks that the industry and the important associations and players of the industry are taking this matter of public hearing serious. I always refer to our earlier governance board chairman, very respectable Dr. Ishrat Hussain. He used to say in the board meetings that you cannot develop standards while sitting in a boardroom. The standards are something that are for the industry, so they need to be developed through a very interactive and very open sort of dialogue with the industry. And our public hearings are one very important part of it. Today, Alhamdulillah, also I can see that we have a reasonably good attendance. I was a bit afraid, to be honest, that this week is sort of Eid week, and belated Eid Mubarak to all of you as well. But I was a bit concerned that maybe attendance may be much impacted. So while we expect more participants every time, but at least I was happy to see that a reasonable number of attendance was there, which was like, my fear that due to a bit, a lot of people taking leave in the remaining days of the week, etc. So we were a bit afraid, but Alhamdulillah, I think it is a good number. So thanks to each one of you who has joined today. With that, I will like to take you through directly to the standard, but I think let me give you a little bit background on that one. Um, just if you allow me to say, the matter of necessity in two different within two different Sharia terms, haja and durura, they are they are very important aspects that need to be defined with utmost care in different situations. So while the core principles of haja and durura are very well defined in Sharia, in classical fiqh, as well as in different AOFI's Sharia standards. But at times there are more aspects to that you can just say as a simple fiqh rule. So while the AOFI's Sharia standard clearly says that in the event of necessity, a Takaful institution can resort to a conventional reinsurance, but how that necessity is to be determined and how it is to be established, it is a matter that requires more input. So while on the core principles of Sharia, we all are clear, but how those core principles are applied in real life, that is a question that is like still, once this standard is finalized, inshallah, we'll have it established well. But again, at this point of time, this principle is not very well established. We believe that the matter of considering a haram, which is fundamentally prohibited, that becomes a necessity in the given situation and given times, that does not only go by the core principle. For that, you need to dig down deep into the matter. You need to break it down into various components, and then only you will be able to determine as to whether and to what extent necessity exists. I always say that some people consider that AOFI Sharia standards are our only product. I would always say, and I always suggest this thing, to read all the AOFI standards in conjunction with each other. So, like on the Sharia side, we define the core principles that apply to the products and services of Islamic finance within the within the paradigm and parameters of fiqh and Sharia as adapted to the contemporary financial system. The 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 effective, as Brother Hamza Bawazir mentioned, the effective benefit cannot be achieved unless you make it workable. Making it workable means that you need to create an ecosystem, a system of governance and controls that gets that implemented. Otherwise, you can have one of the best books of rules that can remain on the shelf and it will be useless till the time it is not practically implemented. The same principle applies that when you are doing a transaction in line with Sharia principles and rules, there are aspects of its fair and transparent reporting. The transactions need to be recorded and reported in the right manner. And here comes the role of our financial accounting standards. Then you need to apply the essence and spirit of Islamic finance that cannot be achieved unless you apply the ethical principles. And there must be a check and balance mechanism that should ensure application of these principles and rules in the right way. Here comes the role of the auditing and Sharia auditing standards. So putting it all together, it's like a bouquet of standards that work together and in conjunction with each other. And this is the most important point here, that this standard complements the Sharia standard number 41 on the Islamic reinsurance. It actually goes in detail and, as I said, digs down deep into the system, goes into the more complex details where the actual transactions take place, where the actual computations take place, and then it determines how the core principles defined in the Sharia standard need to be applied in the real life. I would also like to mention that in last several years, we have realized that while banking sector is the most important sector of Islamic finance, but there have been several sectors which are comparatively ignored. So from AOIFI's perspective, we decided that we need to focus more on some of those aspects, including sukuk for sure, and also on the Takaful. We have worked on social finance, including Waqf as well. Accounting, Sharia, and governance standards on Waqf have been developed as well. We are working on Zakah as well. So there have been areas, and we are working significantly on the newer fintech institutions. So the idea is that while the core of Islamic banking remains there and it remains the backbone of whole Islamic financial system, still it cannot work unless the system of takaful and other complementing systems are there. One very important point I would like to mention here, a lot of people ignore that. The problem is that the availability of insurance and availability of takaful is something so fundamental to the growth of an economic system that people usually undermine it. In our Muslim countries and Muslim societies, you will generally see that the penetration of insurance is very, very low, very significantly low as compared to most of the other markets. We need to understand that while and let me be honest, the concepts of mutual insurance were there some historical records reflect that the mutual insurance system was in the initial days, it was significantly influenced by the practices of Muslim merchants who were working in different parts of the world. So it is not that something fundamentally is bad, rather it is fundamentally something which is very much important for the sake of economic growth. One simple comment on that. Unless you have a good insurance and takaful system available, you will not be able to convince investors to invest. Investment needs security. Investment needs risk mitigation. And presence of an insurance system in line with Sharia principles and rules is something that is fundamentally important to take the Islamic economic system, Islamic financial system forward. One of the worst dilemma that we are facing in different markets is that insurance sector has not penetrated well in our societies, and particularly the Islamic insurance or takaful is significantly weak, which results in a situation that even the Islamic financial finance and Islamic banking and sukuk are not fully supported by this. And we all can see the role that is played by insurance sector by seeing the war situation currently in our region, that how it is impacting the prices of everything. Insurance availability in line with Sharia principles, in our view, is fundamental for the growth of an Islamic economic system. And that is the reason that at AOIFI in the past few years, we have significantly emphasized on this sector. We have developed accounting standards, FAS 42 and 43 in particular, which address the Takaful related accounting aspects, particularly in line with IFRS 17. And also, we have started, for that, we have established a dedicated Takaful committee comprising of experts from across the globe. And same thing we have started on the governance side, where we have established Takaful Governance Committee under the AOFI Governance and Ethics Board, which again comprises of multiple experts from across the globe who are supporting this initiative of getting the better standards developed for Takaful. Now we have this first project, which is inshallah completing its development phase. With this public hearing, our English public hearing sessions will culminate, and we will have one Arabic public hearing session. Inshallah, within this year, we'll try to finalize this standard after completing the due process. We are already in an advanced stage for a governance standard, which is and like now we have completed sort of public hearing stage, and we are preliminary study stage, and we are moving towards development of the draft standard on that. That is on surplus and deficit management for the Takaful business, which include obviously the aspects of qard, capital, etc. as well. Some very important aspects are being covered in that standard, and then probably we'll come up with another standard which will be defining on customization of our application of other AOFI governance standards on the Takaful business. So I have taken a bit of time on this one, but I think some background was important. Now, with your permission, I'll move to that. I think Sister Alia, you need to. Yeah, thank you very much. Thank you very much. Now I'll share my screen. We have two comments. One was about the echo by Brother Ali Heather. Brother Ali Heather, I'm not sure whether you are having that echo, but mostly if other people are also having this problem, please let us know. We'll try to resolve that. But you may just try to reduce the volume. Maybe it will work, or maybe at times you need to exit and re-enter the room. The second comment is about you cannot, Brother Shinof and Shinof Shaib, you are saying that. My apologies if I mispronounce any name. People from around the globe join our public hearings. At times, the names are not that much familiar. My apologies to everybody if the sound, if the pronunciation of a name is not correct. So apologies in advance to everybody. There is no show at this moment, and I'm going to share my screen now. There are a couple of comments that we already received now. So before I start sharing, a general comment suggestion. It is observed that while the standard uses the term takaful insurance in Islamic insurance, some other standards use the term insurance, which may create confusion among certain audience. For sake of consistency and clarity, it may be preferable either to use the term Takaful Islamic insurance consistently across the standard, or to include a clarification stating that wherever the term insurance is used in standard, it refers to a Takaful insurance, Islamic insurance products. Brother Mufti Khwaja Nurul Hassan, Assalamu alaikum, and thank you very much for this comment. Let me clarify this part. Our earlier standards were using the term Islamic insurance and Islamic reinsurance. This included our earlier accounting standards and earlier Sharia standards. When we were developing our revised accounting standards as AOFI, we took a decision to use the term takaful as the primary term, and we only created one or two times reference. But our earlier standards on the Sharia side are using the term Islamic insurance, which inshallah we will pass on this message to the Sharia board that whenever a revision takes place, these are also changed to takaful. I think Sister Alia, this you need to make a note for the Sharia board. We need to pass it on to Sharia board for future use. Takaful should be only used. Why we are insisting on that is because there are several models in different parts of the world which are claimed to be Islamic insurance, but they are not takaful in their true nature. So I'm not going to we have gone through this discussion a lot of times, particularly on the accounting side in the initial, later on the governance side as well. I will not be repeating this thing too many times, but the point is we don't want to criticize any other model that does not meet the definition of Takaful or definition of Islamic insurance as per AOFI Sharia standards. But our governance standards and accounting standards always work in alignment with the Sharia standard, which means that any model that is not acceptable by AOFI Sharia standard is not covered primarily by us. So be it Islamic cooperative insurance or mutual insurance model in different parts of the world, be it any new model in different names like Tasir or something, or be it a Takaful, even if called Takaful, but that does not meet the Takaful definition as per official standard, that is not subject for AOFI. That is the fundamental point. So out of the main models that we have seen, Takaful models based on Wakala and Wakala Waqf are fundamentally in line with what is AOFI Sharia standard defining as Islamic insurance or Takaful. So with regard to the consistency of term and using a consistent definition for that for the application of that term, that is something we have decided. So Brother Mufti Fajanul Hassan, our newer standards are all using the term takaful, while the term takaful shall be in line with the AOFI's definition. That is our official stance, without any disrespect to any of the scholars, any of the regulators who have allowed any other system. Obviously, that is their right. We respect their jurisdiction. We respect their the scholars' knowledge and competence. And but we do not want to comment on them. But we want to say that the model that is subject to AOFI's standards is the model that meets our definitions that are provided in our standards. Thank you very much, Fajam Nurasan. Always your presence adds good points and comments. Thank you very much. From our side, we are inshallah trying to bring that consistency, and as it requested Sister Alia, that if we can pass on this comment from the governance board and accounting board to the Sharia board as well, that for consistency of terms in future, the term takaful should be used. Okay.
Yes, inshallah.
Okay. Then Brother Sadaqat Khan has made a comment. Brother Sadaqat Khan, again, your presence is always highly appreciated, and it's too much encouraging for us that senior people like you take out time and provide us comments. Assalamu alaikum. This standard is directly related and very crucial to Takaful institutions globally, and ideally the management decision makers in Takaful institution must contribute actively. I hope the public hearing committee AOFI must have been invited to Takaful institutions to provide their valuable feedback. Brother Sadaqat Khan, we have like a large mailing list, and we have a list of experts, etc. as well. So we have provided, requested all of them to attend. I think today we have a good enough number of attendees. I can see very senior people, regulators, some CEOs who are attending. So for that matter, actually, I forgot to mention that anybody who want to be provide comments by voice and opening up their mics and cameras, please let us know towards later part of the discussion. We'll see if the time permits. Inshallah, we will allow that. Thank you very much, sir. Brother Ahmed Tahir has confirmed that the sound is good. Thank you very much, and you are welcome, dear brother. Thank you very much for joining in. We have comment from Brother Sayyid Ahmed Hassan, Doctor. Okay, I'm not a doctor, to be honest. I'm a chartered accountant. So thank you very much for giving me honorary doctorate. A lot of people give it to me. So thank you very much. Can you please share something more about Sharia standards? As much as related to today's subject, we will touch upon that. But again, dear Brother Ahmed Hassan, today we cannot go in detail about that. Otherwise, the time will not be enough. So I'll not be going in too much detail about Sharia standards, but we will touch upon only the things that are relevant. Thank you very much. We have comment from Sister Asma Gadamsi. I would like to share a few practical observations and raise some questions from a market perspective. First, the Takaful sector remains extremely small, in some markets representing no more than 0.1% of the insurance industry. In this context, I am concerned that overly restrictive conditions on conventional insurance could limit the growth and competitiveness of Takaful operators rather than support their expansion. Second, while the principle of exhausting all Sharia compliant alternatives is clear, in practical, how it can be objectively demonstrated? What level of evidence would be considered sufficient, especially when retakaful capacity is limited or fragmented? Third, regarding the requirements for temporary use of conventional insurance, how should we align this with market practices where reinsurance programs are often structured on a multi-year basis, typically 3 years, as part of suitable risk management strategy? Finally, the issue of rating is crucial. Reinsurers rating directly. I think your sentence is not complete, but we can understand that reinsurer rating directly impacts the insurance pricing as well as the marketability of your products. I can understand that what you wanted to say. Sister Asma, thank you very much. You have raised all very important concerns. Please allow me to answer them in due course rather than answering them. Okay, now I can see that you have added the point. The issue of rating is crucial. The insurer directly impacts the solvency requirements, competitiveness, and ability to place larger risk. How should operators proceed when available couple options do not meet required rating thresholds? Could additional guidance be considered to better align the definition of necessity with market realities in order to support both Sharia objectives and the sustainable growth of the Takaful sector? Thank you very much, Sister Asma. Again, last point is clear. We can clearly mention that your points are all very important, very well noted. Just allow me to answer them in due course. We will be addressing them. And thanks very much for attending the session after reading the standard very well. I can understand that you have read the standard well and you have identified very good points. So from that perspective, we highly appreciate. Only I would request, please allow me to answer these one by one in due course as we take you through the standard. There are a couple of comments on the, okay. I thought there was somebody comments on the chat window, but please put your comments on the Q&A tab only. So with that, I will share my screen now. I will take you through and inshallah, we'll be able to address all your concerns, inshallah. So first thing, can all of you see my screen? I believe it should be clear now.
Yes.
Just to confirm, it is there and it is moving. Am I right?
Yes.
Okay, thank you very much, sister, for confirmation. So for the preface and introduction part, I will not read it because I have provided all this background even rather in more detail before we go through this one. And now if you allow me to take you to the body text of the standard. So let's start with the objective. The objective of this standard is to provide core principles under which a Takaful institution may avail conventional reinsurance in the event of necessity. Sister Asma, let's start with one very quick comment on your comment that the standard is to facilitate taking conventional insurance in the case of need. It's not to restrict that. I may go later in more detail, but let me tell one thing. There is something fundamentally impermissible, haram. I go to the market, I sell my Takaful product, and I tell them, purchase this product because it is halal. Conventional insurance is haram. We are selling you with this main selling statement. How much honest I would be if on the front end to my customer, I say, I'm selling you this product because it is Sharia compliant. And on the back end, the same haram thing I'm doing. So the question will be, if the necessity is there for you, don't you think the necessity is directly for the customer, that he can directly go to conventional insurance? We'll go in more detail about this part, sister. Fundamentally, first thing we should start with is understanding that conventional insurance and conventional reinsurance is haram. It's impermissible. That's the starting point. So what the standard is saying? The standard is saying as objective, it provides core principles under which a Takaful institution may avail conventional reinsurance in the event of necessity. So it is to facilitate, it is not to overly restrict. But obviously, if I say something to the outside world that is haram, it is haram for me also. And if I need to resort to that, I need to be fundamentally clear that I am following the core principles before going to that. There are a couple of more comments that we have received. Very, very respectable brother Muhammad Akub has joined in. I have a few practical observations, but can send them to Miss Alia should time not be available. Brother Akub, so many thanks for you to joining in and for your contribution in development of the standard. For sure, you are part of our Takaful governance committee, so your comments can be taken towards finalization at that part as well. But if you have any important points, detailed points, you can send to us over through email. But if you feel there is an important point, I think we can allow you to speak up as well, and if the time permits. But sister, can I request that if you can upgrade Brother Akub, and maybe I saw Brother Uzer as well, if they can be promoted as panelists, so that if they want to speak, they can speak in due course. I can see another very respected Brother Salim Lupande. Assalamu alaikum, brother. Thank you very much for joining in. The standard objective contain the word avail. I think the standard aims to allow Takaful companies to obtain and not avail. Now it's a point that is improvement of the terminology. I think you have mentioned that instead of avail, obtaining is a better term. Sister Alia, please make a note of it. If you allow me, Sister Alia, I have a comment here also that I think if avail is confusing, we can use the term resort to. Institution may resort to conventional insurance in the event of necessity. So that is also a possibility. Thank you very much, Brother Salim. We will take your point to the committee. They will see, and the board will see if they feel better with avail or obtain, or as I suggested, resort to, because I can remember at some places we use the term resort to as well. Another very respected brother, Abdul Jabbar Karimi. Assalamu alaikum and welcome, brother. I think the fundamentals should be different for individual and company level. Brother Abdul Jabbar Karimi, thank you very much. We are agreeing to that. We are agreeing to that. We are not saying that it's the same. And that is the reason that we are saying that for the individuals, you should be offering takaful. And in case of company, in case of necessity, you should be allowed to even go to conventional insurance. We are saying exactly the same thing. Thank you very much for your kind comment. We have a comment from Brother Muhammad Farhan. Is the risk retention requirement? Okay, Brother Farhan, your point is well taken. I'll take this point, inshallah, as we reach the respective point. So thank you very much for your kind comment, and inshallah, I will not forget, inshallah, but if I forget, Sister Alia, please remind me that Brother Farhan's comment need to be responded when that we are at that point. Brother Idris Ali Yemer, Assalamu alaikum and welcome, brother. Takaful or Islamic insurance is growing in Africa as a Sharia compliant alternative based on mutual cooperation, risk sharing, and ethical investment rather than profit driven, interest based conventional insurance. But it needs to shape as per Islamic financial system. Sir, is there anything that tried to do on this? Thank you, brother Idris. Let me be honest. Everything that we are trying to do at AOFI, we are trying to develop the practices according to the core that you are talking about. But yet we are living in a financial system, in an economic system, in a legal system, which was not meant primarily for Islamic financial system. So we are trying to make our way through development of standards that try to reach your mentioned objectives. Inshallah, we are together with our mutual efforts, we can try to reach those points. Thank you very much. So let me move ahead. Any other comment specifically on the objective, please feel free. Otherwise, remaining comments, inshallah, we will take when we reach the respective sections. Now, The next point is about scope. This standard shall be applicable to Takaful institutions, including window Takaful institutions needing to avail conventional reinsurance in the event of necessity. I can recall one point was identified in the last public hearing. It was about retrocession by even if there is a Takaful operator, either a full-fledged company or a window. What about retrocession? That was one of the points that we have discussed earlier. I think retrocession is mentioned in the introduction session, but I think, Sister Alia, at this point we need to note here that introduction is normally not the active part of the standard. So we need to bring that point here as well, inshallah, or either at least we need to clarify it either in the footnote or somewhere else as well. So please make a note of this point. I can recall it from the earlier public hearings, and so that was in my mind as well.
Yes.
Any other comment on the scope, please feel free. The standard shall apply to the Takaful institutions and co-Takaful institutions subject to the extent suitable to their business model and approval and exemption granted by the respective Sharia supervisory boards. So that point of retrocession need to be clarified here. Oh, sorry, my apologies. Retrocession is covered here already, but I remember there was a point, so my apologies for this one. So it was covered in introduction and here both. So my apologies, Sister Ali. I think the point is well covered. For avoidance of doubt, it is clarified the scope of the standard and the term conventional insurance does not apply to a Takaful Islamic insurance or Islamic cooperative reinsurance coverage obtained from an institution that follows a Takaful or Islamic cooperative insurance model approved by its respective Sharia board or other Sharia authority but may not fulfill certain requirements of AAOIFI Sharia standards. Availing such coverage shall be subject to specific approval by the SSB of the Takaful institution and general approval of the Central Sharia Board of the respective jurisdiction, if any. This question, this is just a clarification because the definition of takaful in some situations may not be met by the re-takaful institution. So that one will not be considered conventional, that will be considered Sharia compliant. As I said, that while we have our own set of definitions and standards, but we respect the views of the Sharia scholars in different countries. Relationship with other standards, as I mentioned, this standard is to be read in conjunction with standard number 41 and standard number 26 on the Sharia side, Islamic insurance and Islamic insurance. And brother Khajanul Hassan, your point is already well noted with regard to the consistency of terms used. Definition. Necessity definition is the crux of this standard, so let's read it. Necessity in the specific context of the standard refers to the temporary time-bound necessity to obtain coverage or an extent of coverage from conventional reinsurance by a Takaful institution in order to manage the liabilities of the participant Takaful fund to safeguard the greatest interest of the participants at large, provided that it is not solely or primarily representing the commercial considerations of the institution, such as to increase market share or the profit of the institution, and it applies when and only when the Takaful institution has exerted all reasonable efforts to avail re-Takaful coverage under Sharia compliant modes. Sister Asma, your point was related to this definition as well, but it's better if we touch it when we go to the main standard body text. Participants Takaful fund definition is coming from FAS 42. I'm not going to repeat that. Reasonable efforts is where we have to understand here. In the specific context of the standard refers to all possible efforts in the normal course of business without incurring significantly higher costs, while not ignoring any possible opportunities in line with the requirements of this standard. So it further clarifies that significantly higher terms refers to the percentage of 33% of or higher. Now, from where this 33% came in multiple AAOIFI Sharia standards and in some of other contemporary fatwa, you will find that 33% based on a hadith of Nabi Kareem Sallallahu Alaihi Wasallam has been used as a definition of kathir, that is significant. So from that perspective, this 33% has been written here. Again, we request the worthy participants to provide further detail. like, if they feel that any other more justifiable basis can be there. The term significantly higher refers to this, and where the surplus is shared, its net effect shall be assessed. So after assessing the net effect, it should be 33%. Determination of this percentage shall be subjective and based on due consideration of need as decided by SSB. So we are normally talking about 33%, but we are keeping the consideration of need as decided by the SSB. So practically, while we are mentioning that from our perspective, significantly higher is 33%, but we have left this 33% is not written inside the definition. It is written in the footnote, which means that we haven't stick to it as a only percentage that can be applied. Rather, we have provided it as a reference range, and the respective SSB should be the one that can define it in the due course. So that was the reason that this 33% is not written in the body tax. Significantly higher as a term has been written in the text. I think this partially answers, Brother Farhan, your question that I'm trying to explain. So Brother Farhan's comment is the risk retention requirement only applied to treaty or facultative as well? Okay, I'll come to that part, but 33% part that, as you mentioned, is that some company incorporate their risk appetite based on the amount. For example, if each treaty the company can expose its retention to up to 500K, which perceived to only 1% of total risk. I'll come to that point when we come there, but I think that 33% part, I thought that is addressed here. I can see another comment popping up. Respected brother Mufti Khwaja Nurul Hassan, on necessity point, what in case of necessity if the conventional insurance is allowed by SSB? So what will be the opinion of AOFI about their claim as per the conventional coverage amount, complete amount or up to conventional premium amount? Please do advise here on the relevant section. Brother Khwaja Nurul Hassan, it's a Sharia standard domain. Your question that you have raised is the Sharia standard domain. It's not the governance standard domain. So whether a claim that comes, for example, you have taken this thing, but when a claim comes, to what extent it can be taken? Brother Khwaja Nurul Hassan, I believe that this conventional reinsurance part, as per AOFI Sharia standard on conventional reinsurance, does not restrict it to the amount of premium paid. It does not restrict because it is necessity for the benefit of the whole pool of policy holders. So as per my humble understanding of the Sharia standard, this does not apply. However, I will request our sister Alia and Marjan to take a note of it so that we can discuss it with the Takaful Governance Committee and the board, and particularly also when we take it to the Sharia Committee, so that their specific comment on this part is taken. While Sharia standard apparently allows it, but if they have any concern, we can clarify it in the basis for conclusion, etc. So again, Brother Khwaja Nurul Hassan, thank you very much for this comment. There is comment from Brother Abdurrahman, fundamental should be different for individual and company level. Thank you very much. I think Brother Abdul Jabbar Karimi raised the same point. So from that point, I think you are referring to this point. I think I've again agree to this point that, but again, sorry, I will have a concern, Brother Abdurrahman and Brother Abdul Jabbar Karimi. If you want this benefit for the company, I'm not in favor of it. If you want this benefit for the pool of participants, I'm in favor of it. I think the standard very clearly defines that the beneficiary is the party to the contract of reinsurance, and party to the and beneficiary is the PTF, the participant Takaful fund, not the company. So if you are doing it for the benefit of the company, I'm sorry, then it is a commercial benefit. I don't think a commercial benefit in that meaning becomes halal. But if you talk about the correct fund, the Takaful model in which PTF is the party to the reinsurance contract, in that situation, I believe Sharia standard does not put that restriction, and I believe that should be considered acceptable. But again, that is subject to certain conditions that we have. So, Brother Abdurrahman, you are welcome, and let's move ahead. Okay, sorry, Brother Akub has raised a point here, 6C. 6C may conflict with reasonable high cost versus with reasonable high cost versus in no case shall difference of rate be the sole justification. Brother Akub, I think this is a very good point. We did not want to create a conflict here. I think the committee and the board intended at this stage not to create a conflict, but to allow a bit flexibility. But thank you very much. We'll see these points and we'll see your, based on your kind comment, we'll see the wording, how it improves. So the brother Abdul Jabbar Karimi has clarified his point. Thank you very much and most welcome, brother. Thank you very much for joining in as well. So, Brother Akub, with that, we will try to clarify this point that it is not intended to create a conflict. Rather, it is these points are complementing to each other. So, even if wording needs to be improved, we will try to do that. Again, always your guidance is too much helpful for us. Allah bless you. Your vast experience and wisdom is always, something from which we learn. And now, Takaful, the core definition comes from FAS 43, but let me read it out completely because the explanation is here, added explanation is here. So, Takaful is the arrangement among Takaful institutions on behalf of their respective PTF under management to devise a mechanism for the avoidance of part of the risks which the PTF may encounter. On the basis of such an arrangement, a Takaful PTF, which has a distinct juristic personality and independent financial liability, is formed through making contributions out of the PTF as part of the contribution paid by its participant on the basis of tabarru. The Takaful PTF thus formed assumes the risk of covering part of the risk encountered by the PTF. Explanation. Takaful is the Sharia compliant alternative to conventional insurance, having the distinctive characteristics of being based on same principles of takaful and mutuality as indicated in SS 26 Islamic insurance and SS 41 Islamic insurance instead of exchange of reinsurance premiums. The need for takaful may arise in respect of takaful institutions due to lack of sufficient capacity to take risk on or because of regulatory requirements of risk sharing with regard to the magnitude of the risk in question. I think we have another comment from Brother Hamza Hachioglu. Again, my apologies if I mispronounce her name. Hadith, I became ill with a sickness from which I later recovered. The Messenger of Allah came to visit me and I said, O Messenger of Allah, I have a great deal of wealth and I have no heir except for my daughter. Shall I give 2/3 to my wealth in charity? He said, no. I said half. He said, no. He said, 1/3. I said 1/3. He said, give 1/3, and 1/3 is a lot, is significant or kathir. This is the hadith from it is taken as a reference point. Thank you very much, Brother Hamza, for referring to this hadith. This is the one from precisely from where the term kathir is normally defined as 1/3. It's better to leave your heirs independent of means and than to leave them poor and holding them out their hands to people. While this hadith provides a principle of wasiya, but also it provides a definition of kasir for majority of the scholars in the contemporary Islamic finance. Brother Shinuf, again, how we can obtain conventional reinsurance from Takaful institution by identifying specialized products, separating contracts, and involving Takaful operators. How can this be evaluated? Brother Shinuf, wherever a Takaful operator is constituted as a single institution, a standalone institution, or if a Takaful window is operated by a conventional reinsurance, it works on the same model. So technically, the fund created by them is the fund of funds, like fund of PTFs. So that is the correct Sharia position as per AAOIFI standard and correctly even regulatory position in most markets. I'm not going to read the Takaful definition again and Takaful institution definition again, Takaful operator. These definitions are coming from other AAOIFI standards, so yeah, I'm not going to repeat all of them. Now let's move to the main effective part of the standard fundamental approach. Obtaining conventional insurance is impermissible for Takaful institution. That is the fundamental situation. Something is haram, it is haram. Accordingly, Takaful institution shall procure Takaful coverage only under Sharia compliant arrangement. This is the fundamental approach. We understand that fundamental approach obviously may not be workable in some of the situations. So then obviously we have provided a footnote there. Then notwithstanding the generality of paragraph 7, obtaining conventional insurance may and shall only be allowable in case of temporary time-bound necessity. So first thing is, the matter of necessity is not never ending. You define the the necessity, and that necessity has to work according to a working according to a time bound planning. So you cannot say, oh, once we got it permissible from our Sharia board, it is forever. No, at least you should endeavor to get rid of something which is haram. So that is the fundamental part. It has to be temporary and time bound. And that temporary and time bound means that I'm not saying that if you have initially got permission of 3 years and then after 3 years still the availability is not there, you cannot have it for more time. But the idea is that, okay, we constituted our Takaful company 40 years back. We took a permission from Sharia board at that point of time. And since then, we did not do any endeavor to get out of this something which is impermissible or considered haram. This is fundamentally impermissible. So being fundamental impermissible, you cannot say it is halal forever. It is something that should be allowed on a time bound and temporary basis. This has to be determined in line with Sharia principles and rules and the requirement of this standard. Such approval shall be granted by SSB on a specific time-bound case-to-case basis in line with the requirements of respective Sharia standard and the principles contained in this standard. Then the second part is exhausting all possible Sharia compliant options first. So my point is, I have an impermissible thing. I know I have a permission for getting conventional insurance because of need and necessity. But the question is, am I doing enough effort to get rid of that haram? That is the main fundamental question. So for that, first I have to exhaust all possible Sharia compliant options first. So procuring conventional insurance is haram and may lead to breach of trust of the common participant. Now this is the second point as well. Breach of trust. We are here developing a governance standard, and AAOIFI Governance and Ethics Board has to take into consideration the governance as well as the ethical aspects. So for example, if I tell you, oh, I am having a Takaful business, so you can purchase a Takaful policy from me. You can get into your risk covered in Sharia compliant way. And then by default, without any effort of having a conventional, a permissible Takaful, I always resort to conventional insurance. What happens? Don't you think it's a breach of trust? We have some examples, similar examples in the banking sector. We take Sharia compliant deposits on Mudarba basis, for example, and then we place it to the conventional institutions through commodity murabha. There are a lot of means for that. Do you think, even if it may be meeting the minimum Sharia compliance requirements, but don't you think that this may result in breach of trust? So from AAOIFI's Governance and Ethics Board's perspective, it's a breach of trust also, that if I am just having a front end of Sharia compliance and back end of Sharia non-compliance. This is not only a matter of Sharia compliance, it's also a matter of breach of trust. So from that perspective, this issue of first exhausting the Sharia compliant option first comes not only from Sharia standpoint, but also from the governance and ethical standpoint. Therefore, the assessment of necessity shall be performed carefully on a prudent basis, and conventional insurance may only be resorted after ensuring all possible Sharia compliant options have been exhausted. I think we have some comments earlier also on this point, but let me complete this section and then let me take all the comments together. Now, difference of rate and other commercial considerations. In no case shall the difference of rate or other similar commercial considerations be the sole or primary justification for availing conventional insurance by a Takaful institution. So I am having Takaful, re-Takaful, but the rate is high. So for me, it is necessity to go for impermissible. Again, my dear brothers Abdurrahman and Abdul Jabbar Karimi will always come and say, oh, it matter should be different for the company and the individual. But my question is very simple. If the same analogy is applied by a customer, he says your takaful is 2.5% for my car and conventional is giving me 2% for my car. So I should go for conventional because it's necessity. I fully agree with Brother Abdul Jabbar Karimi and Brother Abdul Rahman that technically the necessity for conventional reinsurance comes because we are trying to develop our interest-free, Sharia compliant financial system. So, in order to enable that financial system, it is necessary to allow conventional insurance. If we did not allow conventional reinsurance in the beginning, 40 years back, 50 years back, it would never have seen the, what did they say, the day of the light of the day. My apologies. That, because it could never have been possible to at least even incorporate a takaful company or create a takaful window if you did not allow in the beginning. But let me ask a question. If all the takaful companies all the time say, we are okay with the conventional insurance, particularly because of the rate factor, would any conventional reinsurer ever think of converting to retakaful or establishing a retakaful window? Would they even think of? Because they will say, the customer is okay, why I need to bother about that? So the point is, as we said, that it should be a time-bound thing and it should be going in the proper way. And particularly, the rate should not be only justification. In the context of this standard, the commercial consideration refer relatively high cost of retakaful as compared to conventional insurance and not the financial viability of the retakaful institution itself. If it is an issue of financial viability, obviously you have to resort to that and the Sharia board has to see. Effect of rating. Where a retakaful option is available with retakaful institution having a rating less than the desired rating, a decision to revert to conventional insurance shall only be taken strictly after considering the following factors. A. Where the rating of such retakaful institutions are not within acceptable limits as per regulatory requirements, and if exemption from such regulatory requirements is not possible, conventional insurance may be obtained strictly on the basis of necessity. Where the rating of such retakaful institutions are less than the desired rating but within acceptable limits as per regulatory requirements. So as a company, I want AAA rating, but the regulator allows B plus rating as well. For example, then the question is that if the permissible option was available within the limit defined by the regulator, you should still stick to that. So even because I can always try to put higher ratings for that. I think Sister Asma had a point on that one as well. But let me complete this section and take all the comments related to this section at one time. In the event of decision has been made to take conventional insurance instead of retakaful in line with the provisions of paragraph 11, in the best interest of the participants, not the best interest of the company, in the best interest of the participant. It is preferable that the conventional insurance company has a reasonably better rating as compared to such retakaful institution. Means that, okay, we have a one-notch difference. The second one is also acceptable within the parameters, only one notch difference, but because of that one notch difference, we'll still go for the conventional. No, the point is, while we are talking about rate difference should also be material, here we are talking about rating difference should also be material in order to resort to the conventional. I can see comments are coming up, so let me try to take all the comments together as soon as I complete this section. Retention of risk. Now, this is again a very fundamental and ethical issue. So we say that A Takaful institution in no case shall work just as a conduit for conventional insurance and reinsurance. That is the point. If the Takaful company is just working as an insurance broker, 100% risk passed on, then technically you just become agent of the conventional. You are not having any retention. You are not having any sort of risk proper risk taking. So the PTF created is 100% covered by reinsurance, conventional, and you are just working as a conduit for conventional reinsurance. So technically you become a agent of the conventional. This is where we have said that it should not happen, which means that you must have retention. Retention means that at least some risk should be retained, which means that we are trying to do something permissible. Yes, we are resorting to something impermissible because of necessity, but it's not the case that we are just working as a conduit for them. A Takaful institution shall ensure a minimum extent of reinsurance with conventional insurance companies. Such minimum extent shall commensurate with the regulatory requirements for minimum insurance coverage for the specific insurance basis business where applicable, and the Takaful institution's strategy considering the regulatory requirements related to solvency and capital maintenance. So the minimum extent should be there. This it means that we need to define it in a way that the overall risk retention, at least to some extent, ensures that yes, we are doing takaful business. We are not just agent of the conventional. Accordingly, a Takaful institution shall retain a reasonable percentage of underlying risk, particularly in the case of treaty reinsurance. So for treaty, this applies. For facultative, excess of loss, etc., we have, because particularly for excess of loss situations, for facultative, different situations, we have not made it a condition. We are talking about treaty because treaty is the situation which works more like a fully passing on the risk. So such retention of risk shall be in the following ranges. In the normal cases, preferably not less than 51%, but no case less than 33%, excluding XOL policies. So what we are saying is that you should demonstrate that the customer, when he sold a policy in the name of Takaful, at least have a reasonable coverage under permissible Takaful through you. So this has to be like, a 51% or, okay, one thing to clarify, I think this came as a comment in the last public hearing as well. Sister Alia, I think we need to clearly mention that this retention applies only for conventional part. For the retakaful part, obviously there is no retakaful for no retention consideration. There was a confusion. I think it came somebody I think mentioned in the earlier public hearing or somebody mentioned it somewhere else. But I recall this comment that there was a confusion about that part. So we just need to clarify that part, that this retention ratio applies only to the extent of conventional reinsurance.
Yeah.
In normal cases, it should not be less than 51 and not more than 33. In newly launched Takaful institutions, number one, and business lines in the first 3 years of operations, and the business lines not covered by Takaful institutions. So we were given examples about, like, for example, in some markets, there is mobile phone snatching. So for mobile phone coverage, at times, you cannot find Takaful coverages. Or for some other new lines, you cannot find Takaful coverages. And at times, for some major areas, even you cannot find Takaful, including marine, etc. At times, not always, at times. So putting it all together, excess of loss policies are excluded. So if you have excess of loss policy, that has no retention condition, because it means that actually excess of loss policy means that below the level of that loss, you are retaining the risk. So that for excess of loss, this does not apply. But for normal situation, 51% means that majority is permissible and 33% means that the term kathir is at least met. These are the conditions, but for the new lines, significant sort of relaxation to this, and for those lines where Takaful coverage is not available at all, these are allowed. So if you have, for example, some areas where Takaful is not available at all, for those this condition of this condition of retention applies at 15%. In all cases, net reinsurance premium, net of any discount, should not be higher than the amount of net takaful contribution less of applicable wakala fee. This is a very significant issue, and I can tell you I saw it with my own experience. For example, there is 100 BD coming as the contribution, total takaful contribution. Wakala fee of 40 is taken out of it. There is 60 left over in the PTF after wakala fee. And the retakaful contribution reinsurance premium goes at 70. So what we are saying here is that the net reinsurance premium shall not be higher than the amount of net takaful contribution less applicable wakala fee, because this technically passes on the whole risk and you are just taking our agency commission on that business. That is again one of the conditions here for clarification. Again, let me complete the whole section. Before I take comments, I can see a lot of comments are already there. It's a long list of comments, but please let me complete the whole section. So we'll come to that. Use of co-takaful. Exerting all reasonable efforts for the purpose of application of principles of the standard, the Takaful institution shall use. Sister Alia, I think we need to improve wording here. I think we need to slightly improve the wording here. I think the wording is a bit complex. Maybe we have the sentence structure is not very good. But let me read it first. But sister, please make a note of it. Yes. For the purpose of application of the principle of this standard, Takaful institution shall include use of co-Takaful before resorting to conventional insurance. I am a Takaful company. Sister Alia is running a Takaful company. But I believe that a customer comes to me and I believe that Sister Alia is my competitor because that is a Takaful business competing with me. I have no remaining lines of Takaful. I am okay to book that Takaful on the front end and go to conventional reinsurance on the back end. This is something that may be considered impermissible because we are promoting something wrong. She may have a Takaful line available, or she may have a retention risk with retention of risk possibility. So what we are saying here is, if other Takaful institutions in the jurisdiction have the capacity to cover a proportion of the risk directly through retention or indirectly through unutilized Takaful limits available, then this option shall first be utilized. This is necessary to ensure that the purpose of availing conventional insurance is not just to increase the market share, but actually to cover the risks which are not possible to be covered under Sharia compliant modes. I know that from commercial considerations, this point looks bad, but I can assure you that from Sharia compliance perspective and the ethical perspective, this point is a fundamental. I can see some points were there, so we'll come to that, but let's complete this section. Party to the contract, I already mentioned that PTF is the party to the contract and not the company or the operator. Period of coverage. A Takaful institution shall ensure that in all cases the period of reinsurance arrangement shall not exceed the actual need and shall strictly be time bound, because we talked about permissions should be time bound. So it should be time bound. The period of coverage for conventional reinsurance arrangement shall correspond to, I think. Sister Alia, please, again, we need to see the sentence structure here.
Yes.
Correspond to an approved transition plan. Now, this is fundamental. 40 years back, I started the Takaful company, and we are still running that Takaful company 90%, 95%, 100% based on conventional reinsurance. The question is, what is my plan to get out of this haram? Or is it like that, okay, I'm perfectly all right with having it lifetime or maybe till the end of times? That is the question. So you need to have a transition plan. How actually you will start moving towards Sharia compliance? This is fundamentally again one of the factors for the determination and assessment of necessity. Additional considerations in case of window takaful institution. A window takaful institution shall not resort to a specific reinsurance company in order to enjoy commercial benefits through increased business by combining the reinsurance business of the retakaful operations with the reinsurance business of the conventional parent's insurance operations. So I am a window takaful, but I'm not going to retakaful, but rather I'm resorting to the same conventional reinsurance as my conventional parent is doing. Because of combining the business, I can get some commercial advantage. So this is something that is sort of prohibited here. The SSB of a window takaful institution shall exercise a more prudent approach towards allowing the use of conventional insurance on the premise of necessity, considering that the reputational risk for the window takaful institution and the takaful industry shall not increase by such relaxation. And in view of the requirements of paragraphs 14 to 17, a window takaful institution shall have a reasonable retention of the takaful risk and shall not function merely as the conduit. Then treatment of transactions and balances with conventional reinsurance. I think this point we can take it later. So let me just try to cover now all the questions that we have till now on the comments and questions that we have here. So let me just now there is a large number of comments. Couple of comments were already there that I had not taken earlier. So let me just try to take the smaller comments. Or let me start with Sister Asma. She has raised very good points in the beginning. Okay, why these points are missing? Sister Alia, did you mention them as resolved? Sister
No,
Asma?
brother, I didn't
Okay,
resolve
maybe
them.
I did it by mistake. My apologies. Maybe I did it by mistake. So, Sister Asma, your points, number one. Uh, first, the takaful sector remains extremely small in some markets, representing no more than 0.1%. In this context, I'm concerned that overly restrictive conditions on conventional insurance could limit the growth. Sister, I would like to re-emphasize number one, this standard is to allow something which is haram. It is in case of need. It is not there to restrict our Sharia compliant business. For the newer lines, for unavailability, all these situations, if you see, we have already allowed flexibilities, but we will be highly appreciating if you can make a more specific comment. But I think, Sister Alia, this provides us one more, suggestion for the committee and the board that, for example, if you recall, we had in the Windows standard, we had provided some scope exclusions that if it is something new or if it is something on a test basis, there can be specific exemptions to that. So I think from the scope part, we can exclude some of these situations, or we can clarify that in those situations, which are the example that she has mentioned, where the insurance, so maybe we can say that unless it reaches the reasonable size in the market, some requirements of this standard shall not apply. So I think we should allow these things based on our respected sisters' comments. Something as providing an exclusion to very small markets and very new institutions. So thank you very much, sister. This point is well taken, and inshallah, I can assure that while we have tried to provide some exclusions to smaller and newer institutions and business lines, but we will try to expand that scope. Thank you very much. Your second comment is about principle of exhausting all Sharia compliant alternatives is clear in practice. How can this be objectively demonstrated? What level of evidence would be considered sufficient? Sister, here there is something that I may not be, while I agree with your point, but I may not be recommending to the board to be more precise and more more categoric to this point. Because if we make it too much minutely detailed, then the flexibility that we have provided right now in the hand of the Sharia board will go away. So while I agree with your point that some guidance might be needed, but from my perspective, being keeping quiet would be better for the industry at this point of time so that the SSB can define. Maximum, Sister Alia, if we can make a note of it and we can write it in the basis of for conclusion that this point was raised and it was a well addressed, but maybe we will be, if the board agrees, we will be not going in detail, but we will be just keeping it like more like keeping it more like as a flexible point in the hand of the respective Sharia board and the regulator, where the regulator has this policy. So from that part, we can, I think, define this thing. So thank you very much. This point is also well taken. Inshallah, we'll take care of it. Third, regarding the requirement of temporary use of conventional insurance, how should we align this with market practices where insurance programs are? Sister, we are not talking about 2 months, 3 months. We are talking about a temporary and time bound thing. So, but again, maybe we can provide that because we talked about a transition plan as well, sister. If you can see, we have talked about a transition plan. So, Sister Alia, if we can make a link of this point with the transition plan thing, and we can say, maybe we can provide some base of conclusion or a footnote to clarify this point that when we say time bound doesn't mean that it is about 2 months, 3 months. It's about few years for sure. But that obviously should be subject to a transition plan in which gradually we should be able to reduce this thing.
Yes, sure.
Then we have your fourth point was about rating, I think. Your fourth point was about the rating. And the rating is critical. Reinsurance rating directly impacts solvency requirements, competitiveness, and the ability. Sister, if you see, we have clearly mentioned that it is about the regulatory acceptable rating level. So we have said that if it is not regulatory acceptable rating level, then you will not take it. And we also talked about the financial viability part. So I think this point is well covered, but we will again see your point, whether it is covered by these viability, financial viability of the institution part, and also by the regulatory requirement part. For me, it is well covered, as I read to you. But otherwise, from my perspective, it's okay. But we will take it to the committee again. We'll request the committee if they can see if it is if it is further, some further clarification is needed, we can try to do that part. Again, you have talked about additional guidance with market realities. My suggestion again, sister, will be to leave some of details in the hand of the regulator and the respective Sharia board, because each market's realities are different. It's better that at AOFI we define the core principles and do not define more further. But if you feel there is a need, we can, in due course, we can develop more guidelines on that part. So thank you very much for your very, very valuable points. Now I'll take Brother Farhan's point again. The risk retention requirement only applied to treaty or facultative as well. We are clear that it applies to treaty, not to facultative, not to excess of loss policies. Like normal cases, not less than 51%, absolute minimum of 33%. The follow-up question is, some company incorporate the risk appetite based on the amount. For example, each treaty, the company can expose retention up to 500K. That is XOL position, which perceived to be only 1% of total risk. Again, why we excluded the XOL policies, the main reason is that XOL policies are taken depending on the risk appetite and the financial viability position. So for example, one very common example of excess of loss policies is about vehicles. So in vehicles, normal repair, maintenance, accidental, that is all covered below the limit defined in the XOL part. But beyond that is actually total loss situation and the theft situation. So those are the situations where maybe the Takaful operator may not be able to address those risks at that magnitude. The same thing may apply to marine, for example, that General, transit loss may be covered, but not the whole loss of the cargo. So things like that may be there, which can be covered. So from that perspective, we are talking about mainly treaty. Treaty is primarily passing on your whole business to the conventional, and that's why we have put this condition primarily on treaty and on not other types of, and XOL are expressly excluded. That's Brother Shakir, our own colleague, Brother Mufti Shakir Jakura, has raised a point about creating a cross reference of clause 6 of SS 41. Surely it will be done. Thank you very much, Sister Alia. But just make a note of Brother Shakir's point. We will put it in the body text or in the footnote, but it will be done, inshallah. But just to clarify, Brother Shakir, if you go to the definition of necessity, we have clarified that in the specific context of this standard, because we had to define it in a way that it is more workable here. So, but thank you very much for the point. Brother Miftahu Dibaba has mentioned, state the only condition under which it becomes allowable. Brother Miftahu, if you can clearly mention the clause number where you are referring to. For general insurance, conventional insurance, we have talked about necessity, but where you have mentioned, where your comment is related to, if you can mention kindly the clause number, I will take it more categoric. We have comment from Brother Marcel Umar Pap. Salam, agree with Brother Akub that the cost should not be the only criteria. For example, Swiss Takaful SRR is able to offer significant proportional Takaful treaty capacity on a quota share basis in Pakistan. However, Takaful companies prefer to obtain surplus capacity rather than the quota share. In such a case, permissible to obtain conventional insurance even if retakaful capacity is available based on a different structure. Brother Marcel Umar, this is where the real value addition comes in these public hearings, experts like you talking about these significant points. I would suggest that I may not be the best person to answer this thing very clearly. While I think it's a very good point, we should take it to the Takaful Governance Committee. Brother Akub is part of that as well. We'll take his guidance on that point for further details as well. Brother Marcel Umar, if you can kindly write down this comment, that will be in more detail with some example. It may be even more beneficial for the committee. But your point is well taken. It will be discussed in the committee. I don't want to answer it. Because it's a genuinely technical point. We need to evaluate different situations and then we will be able to answer that. Thank you very much for such valuable comment. Thank you very much for joining with us. It's highly appreciated, sir. We have comment from Brother Isa Al-Riyami. First, I would like to thank AAOIFI for organizing this valuable public hearing session. Brother Isa, thank you very much. And it becomes a success only because experts like you actually join in. My question relates to the concept of reasonable efforts mentioned in the exposure draft, particularly in relation to the requirements that the Takaful institution must exhaust all Sharia compliant alternatives before resorting to conventional insurance. Given that the assessment of reasonable effort may involve a significant degree of judgment, how does AAOIFI envisage ensuring greater consistency in the application in this concept across the Takaful institutions and their respective Sharia supervisory board? Brother Isa, I have partially responded to this point already, that a little bit flexibility in the hand of Sharia supervisory board will be more useful than a more detailed and minutely detailed standard by AAOIFI. But if you and some other members feel that this is useful, we may try to provide something in the basis for conclusion, even providing flexibility, but still providing some guidance points to determine this thing. So Sister Alia, please make a note of this point. This is very important, but we will see. For me personally, in the body text, I won't prefer to go in more minute details, because a little bit flexibility in the hand of the regulator and the Sharia board is very important to address the practical needs. But even if we provide some details in an appendix or in the basis for conclusion, it might still be helpful for the respective Sharia boards to decide that to what extent they want to create the relaxation. In other words, AOIFI is considering the development of guidance indicator or practical benchmark that could assist institutions and SSBs in evaluating whether the threshold of reasonable effort has been genuinely met in order to avoid inconsistent interpretation of potential over-compliance on conventional reinsurance, over-reliance on conventional insurance. The point is well taken. Inshallah, we will try to address it one or another way. We have comment from Mahavi Ismail. Assalamu alaikum. First, would like to thank you very much for inviting me to attend the public hearing. It's always a pleasure. Your presence, experts like you are always very much, your presence is very much beneficial. Second, concerning section number 28, I suggest the SSB of the institution. Now, we are talking about 28, so I will take it later. Thank you very much. I think then we have Waisal Alata. This heading, especially the phrase in Article 9, ensuring that all possible options have been exhausted, is very important. It should be made more concrete, and control points in relation to Sharia compliance and audit should be clearly defined. Thank you very much. Some others have also raised this point. So inshallah, we'll try to provide at least some guidance in the basis for conclusion or in an appendix, unless the board agrees to put it in the body text. Brother Ahmed Mamu, what are the major difference between conventional insurance and Takaful Islamic insurance? Please list it for our information. Brother Ahmed, my apologies. Today we are talking about a more specific subject. So maybe today might not be the best time for that. Obviously, we have our standard on the Sharia side. Even actually, the accounting standard, FAS 42 and 43, they provide some very there is a small section on identifying the Takaful model. Sister Alia and Sister Marjan, can I request you if you can provide Brother Ahmed Mahmood the core structure requirements that are provided in FAS 42 and 43 about how Takaful model works? That is one very quick answer that is provided in the respective standard. Obviously, it's not the subject of this standard, so I'm not going to take it in detail. And obviously, Sharia standard is the basis for that. So Sharia standard number 26 is something that you should read. Again, your comment is about these headings 10, 11 are well prepared and appropriately chosen. Thank you very much and highly appreciated. Brother Abdul Jabbar Karimi, I agree with you, however, to my view that it would then be referred to the respective Sharia boards to advise on case-to-case basis about rate difference, acceptance, smaller sins to avoid the bigger ones. Thank you very much. Again, Ahmanul Balayatan or the smaller risk. Thank you very much, Brother Abdul Jabbar Karimi. Again, your presence here is much appreciated, and we are thankful to you for taking out your time. Brother Ali Heather, does point number 13 missing or it has a typo mistake? We jumped 14 after 12. No, 13 is here. I think I might have missed, or maybe obtaining 13 is there. So I think we covered. This is the one that we talked about. Obtaining Rita Kaful coverage shall be preferred even if the Rita Kaful institution has a lower rating compared to the available conventional insurance. So I think we have covered this point. Thank you very much. Sister, but there is a sister.
Yes.
I remember last time also we noted that in the end there is a typo error. After the institution, it has to be comma and I has to be small. It is a continuing sentence. Okay. I think we noted it earlier as well. Just note it down. Thank you again very much. The point is there. You can. Now, there is one anonymous attendee. Sir, how do Takaful institutions transition towards more Sharia compliant insurance alternatives like the Takaful? When there is a will, there is a way. وَالَّذِينَ جَاهَدُوا فِينَا لَنَهْدِيَنَّهُمْ سُبُلَنَا. Allah subhanahu wa ta'ala says that when those who try make effort in our way, we give them and we show them the path. So the point is when you start working towards that, obviously there will be demand. When there will be demand, there will be institutions coming up. Otherwise, Takaful institutions may sit together, create their own funds of funds, etc., to manage those things. So to be very honest, there are a lot of good opportunities that are available when there is a clear consensus that we have to move towards transition. Now, this is something obviously everyone has to play their role. If you talk about most of the countries have at least reinsurance facilities available. Those reinsurance facilities should be encouraged by the regulators, the governments, and by the Takaful institutions and the industry at large to start, operating at least Takaful windows to start with, and then eventually converting for that. One thing I would like to say, there was one comment in the beginning as well by Brother Muhammad Arshad. I would like to answer that comment, Brother Muhammad. If you allow me, I would say that conversion should not be a conversion of name. Conversion should be a basis for real conversion. Conversion should not be an excuse to allow impermissible things. We are having this problem on the banking industry side as well in the countries where some conversion has taken place, institutional conversion, or where in Pakistan we are observing the industry level conversion is having some challenges. So people are trying to come up with solutions that are less than preferable, or at times something that is not even allowed by AAOIFI standards are being used as conversion methodologies. I have a significant concern that conversion means conversion. Conversion does not mean change of name. We have to change the business model. We have to change our mindset. We have to change our thinking methodology. So while I fully agree that during the transition phase, there might be some relaxations available, but those should apply to the transition phase. And as I said, and as the standard says, draft standard says that it should be time bound. But again, the point is well taken. I'm not against your point. I'm just creating this, raising this concern or having this caution that at times conversion is used as an excuse to make impermissible as permissible, and we have seen it across the globe. So this is something that we need to address together. We have comment from again my respected brother Muhammad Akub. 16A is in practice in the case of proportional treaties on the relationship between retained risk and insured risk should not be less than 1 to 4 or 1 to 3, excluding excess of loss, protecting the net retention. Thank you very much, brother Akub. I think we are talking about more or less the same, but you are talking about 1 to 4 or 1 to 3. I think we have talked about 1 to 2 to 1 to 3. So, but we will take your comment for sure and we'll discuss that in the committee, inshallah. Sister Alia, please make a note of this point. Thank you very much, Brother Akub, again. Brother Ahmed Mamu, I need to participate on AAOIFI annual meeting if you invite me within fee sponsorship from Ethiopia. Brother Ahmed, you are most welcome. As soon as we are able to convene the conference, inshallah. Obviously, there is no fee to attend the conference. Always, AAOIFI's conferences are always free to attend. At times, we take a fee to facilitate the visa processing. Again, we will try in your particular case to arrange visa on a pro bono basis for you, inshallah. Brother Abdurrahman, you are most welcome. Brother Muhammad Akub has mentioned about item 16 should apply to conventional. Thank you very much, Brother Akub. Inshallah, we'll clarify that in the standard body text or in the footnote. Again, Brother Akub has a point on 19. The party to the insurance contract cannot be the PTF since the PTF is not a legally regulated entity in most jurisdictions. Brother Akub, I think you have raised a good point. Actually, we have talked about this thing earlier in different forums. Actually, what we say that the company acts as an agent on behalf of the PTF. So it needs to be rightly worded. So the contract is signed not by the PTF. The contract is signed under the Wakala agency rights that are provided to the operator. Operator will sign the agreement will be between the agent and by the agent and the Takaful operator. But the agreement should clearly mention at one place or another that the agent is acting in the capacity of agent on behalf of this. I think we have discussed this thing in different forums, and I think this is something that is achievable. But again, Sister Alia, please make a note of it. I think some guidance might need to be provided because that's a sort of a single liner principle. So we need to clarify that it can be signed by the operator in the capacity of the agent, and somewhere it should be clarified that he's signing not in its its capacity as operator, but it's the capacity as agent. Brother Sadakat Khan has raised another point. Period of coverage of conventional policies. A Takaful institution shall ensure that in all cases the period of insurance arrangement shall not exceed the actual need and shall strictly be time bound. Question: actual need and strictly be time bound. I think it should be defined clearly for maximum period, etc. I think it's a good point. We can define like suggested limit, not a fixed limit, but a suggested limit. But again, as I mentioned, in case of certain other points, that some flexibility in the hand of the Sharia board need to be provided. So maybe we can define a reference range of the period here, not the not a very fixed, like sort of hard and fast rule. Thank you very much, Brother Sadakat. Again, we have comment from Brother Ubair Bhatt. How should necessity be practically determined as evidence when re-takaful capacity is limited, especially for window takaful institutions? Brother, I would again say it's a chicken and egg situation. If I tell all re-takaful are not allowed today onwards to do re-takaful, I can assure you that lot of re-takaful reinsurance operators will open re-takaful windows. Nobody wants to let go their business because they will have competition. So one of them will only open the Rita Kaful, it will get all the business. So I can again tell you that it's a chicken and egg situation. And when you start putting pressures on this part, it is there. I can mention to you that our very respectable honorable chairman of AAOIFI Sharia board in a separate in a letter that I have seen, he has mentioned that in his view the necessity time is again I'm using my wording. I cannot recall exact wording that he said, but his point was that necessity was in the beginning years. Now they need to move towards retakaful only. So this is something that is like in the business reality is changing in different markets. So today, if, for example, in a market, a regulator says that the takaful operators must go only to retakaful, I can assure you that there will be somebody to tap that business. When there is business, people will come. When there is a will, there is a way. I can assure you on that part. But defining something very categoric by AOFI in its standard is something that we should try to avoid because there are different markets and different stages. Sister Asma in the beginning, she mentioned a very important point about some markets where it is very small. I think we need to provide an exception to those markets where it is less than 1%, 2%, 3%, 4%, or 5%, whatever percentage the Takaful committee and the board agrees, but we should try to provide some exceptions to this rule for that situation. Brother Shakir Jakura again kindly help in reconciling the understanding of this clause 6.5 in for SS41 with the minimum percentage suggested. Limiting to the minimum extent of reinsurance with conventional insurance companies and Sharia supervisory authorities should ensure this. That is, if the minimum requirement of the new takaful operator is determined by Sharia board at 10%, but the governance standard allows up to 15%, what would be the guidance of the governance standard? Governance standard is allowing the maximum percentage, Brother Shakir. So it is allowing the maximum percentage. It's not allowing the minimum percentage. So Sharia board can define 10%. That's okay. Sorry, in this situation, retention percentage you are talking about. So it's retention percentage. I think we need to clarify this wording. I got your point. I think before taking it to the Sharia committee, we'll try to reconcile that. Sister Alia, please note it down. But I think when we have said 15% as minimum retention, we wanted to keep it minimum. In that situation, in the retention part, they cannot go to 10%. But they can define 25%, 20%, 33% something as a retention. I am not sure that 6.5 is in Sharia standard 41 is related to retention. It might be related to treaty. So we'll have to read it again and we'll see if it is about treaty-based reinsurance or it is about retention, and then we'll try to reconcile. Thank you very much, Brother Shakir. Again, you raised a good point. We'll try to resolve it, inshallah. Again, Waisal Alaja, Article 14, 15, and 23 are very important because, as you know, there are fronting transactions. Those transactions are mostly carried out with conventional insurer, and unfortunately, the care and diligence shown in other reinsurance transactions are lacking at this point. Indeed, even Sharia audit is seriously inadequate in this regard. Thank you very much. I think you are actually appreciating what we have written. Thank you very much. We fully agree with you. Brother Ali Abbas has raised a point. Assalamu alaikum. Currently, the documentation around Takaful follows similar practices of conventional insurance, which is an internationally accepted standard. Should there be some guidance around this? I think documentation, normally we don't go in the domain of documentation normally. I think Sister Alia, please make a note of this point for the upcoming agenda of the Takaful governance committee. If the Takaful governance committee feels that at one point of time we should define some guidance, so maybe we can develop a guidance note or we can cover it in one of the upcoming standards going forward. Normally, we don't define a document or prescribe a document. Normally, we try to provide the documentation principles. So I think documentation principles may be defined in one of the upcoming projects of the Takaful Governance Committee, inshallah. Thank you very much, Brother Ali Abbas. Um, Brother Ober, but again, where takaful is used as a part of financing products as a mandatory takaful, what level of due diligence is expected regarding the takaful providers' use of re-takaful versus conventional insurance? Should agreements cover that? I personally believe that, this should be covered in the agreements, but defining too much detail in the standard is not easy. But we take your point seriously. We will discuss it. Maybe this standard does not have a domain on the financing products, because that is related to the banking sector or the financial sector, financing institutions. So from banks and similar financial institutions. So from that perspective, this standard may not have a domain on that. But your point is well taken, and maybe we can try to cover that point somewhere. Brother Marcel Omar, again, very valid point, Brother Omar. Thank you very much. Highly appreciated, and I'm humbled. Since the regulators in Brunei, Malaysia, and Indonesia are stricter in respect of Zarura Haja, much more business is going to Rita Kaful companies, which is beneficial for the entire Rita Kaful industry. Allah bless you, sir. That is exactly my point. Thank you again for coming up with the industry real life examples. Okay, brother Mufti Khwaja Nurul Hassan has mentioned a point for my eyes only. So, brother Khwaja Nurul Hassan, I think we will discuss this point later, inshallah. We can discuss it offline. Okay. I think it was a sort of marathon of very good points. So let me try to move ahead now with moving to the next point. I think just for I think we covered till 2020, sorry, 22. Now 23 onwards we are starting. No, I think window we covered already. So we will be starting 24 onwards. Treatment of transactions and balances with conventional reinsurance. This is an important point that where the Takaful institution avails conventional insurance facilities, the following conditions related to transactions and balances shall be met at all times. Any interest-bearing cash reserve as well as interest-bearing balances with conventional insurance companies shall not be kept insofar as practicable. In the event of same being inevitable, any interest income shall be paid to charity. It is permissible to receive an insurance commission from the insurance company either for the PTF or for the Takaful institution. However, a discount in insurance premiums may be sought, which shall be credited to the PTF only. It is impermissible to receive a insurance surplus distribution or bonus from the reinsurance company either for the PTF or for the Takaful institution. However, a discount in reinsurance premiums may be sought, which shall be credited to the PTF only. A Takaful institution may recover for its shareholder fund an amount up to the actual administrative cost incurred in acquiring a conventional insurance policy in case where such responsibility is not already included in the responsibilities against the wakala fee, and any necessary payments to insurance company whose delay may cause payment of interest shall be paid in time to avoid payment of interest in any form. Brother Mufti Shakir, you have raised some good points, so may I request you to just have a mapping of these points with the Sharia standard. These are in principle in line with the Sharia standard. We'll just have to create a cross reference. If you are preferring to create cross reference in other areas also, it will be good. But the standard in the beginning clearly says that it is to be read in conjunction with 26 and 41. Okay, now governance and control requirements. Those charged with governance of the Takaful institution shall cause to develop, approve, supervise, and monitor the following: a strategy whereby it may be appropriately documented in line with the requirements of the standard as to how and to what extent the Takaful institution may acquire conventional insurance coverage in the event of necessity. So there has to be a proper documented strategy, and time-bound transition plan. Now, this is a condition from our side that you cannot say, "Oh, we got a permission forever till the doomsday." Strategy and time-bound transition plan whereby the Takaful institution shall ensure the termination of availing of availing conventional insurance, preferably within a period of 3 years, but in no case more than a period of 5 years, or as defined by the respective RSA. Again, first, RSA has the authority to define it more. We can create an exclusion system for very small markets. I think, as I mentioned, this point should have more like flexibility in terms of number of years. But I cannot just sit and say, "Oh, I am happy with haram." This is a fundamental problem that we want to address in the mindset. Oh, we got permission from Sharia board. It is halal in our case. Oh, it is halal forever. No, I would humbly say that now in some markets, Takaful is 40 years old. You cannot say that it is a lifetime or till doomsday, it's a permission. So our mind should be clear. We are doing something impermissible because of necessity. We need to get out of it. So that is where we have put it as a condition of those charged with governance that the board and its committees and the management shall develop an accountable implementation of strategies according to the requirement of this paragraph 25, and they need to and should not exceed the limits defined in that one. The management shall maintain and submit to SSB appropriate documentary evidence that despite reasonable effort, it could not obtain Ritakaful. So wherever we have mentioned that exhausted all efforts, management has to submit to SSB how they can demonstrate that they have exhausted all efforts. That is what we have asked here. It shall provide prompt and unhindered access to SSB in respect of all information required, including all correspondence and other evidence with the Great Takaful institution and conventional insurance providers to substantiate the management's comments. Before providing a specific time-bound transition-based approval to avail conventional insurance, the SSB, on the premise of necessity, shall consider as to how and to what extent the management of the Takaful institution can justify it has exerted all reasonable efforts. So we have not gone in minute details, but we clearly said that the management has to provide explanation. Management has to provide access to SSB to the correspondence and other evidence confirming that they have exhausted it all, and SSB is responsible to ensure at their end that this is done. And to be honest, one point which is a bit unrelated, but I can tell you that at AAOIFI we have always promoted that Sharia board should include experts. Sharia board should include expert advisors. This is according to our new governance standard that expert advisors should be there. So this is something which is fundamentally important for Takaful business, that expert advisors, I would say people like Brother Muhammad Akub, these type of people should be part of the Sharia boards who can help the Sharia board understand the management's claims and management's views. And then obviously they have to see assessment of the factors like, are there any regulatory requirements in this respect and what is the effect of the same while considering necessity. Sorry, my apologies. How many rejections by Takaful institution can be evidenced? How much Takaful coverage is rejected by the Takaful institution due to rate difference or unsatisfactory rating? What data and analysis are available with regard to market factors? Have all possible avenues been evaluated, including an assessment of the peers approach? What is the process of assessment of necessity at the industry level? What efforts are not exerted or avenues not evaluated considering the cost of other commercial consideration? How it can be evidence that the retention of risk beyond those proposed by the management is not practical and feasible? To what extent is the transition plan being adhered to? So these are the points, and SSB should not be influenced by exaggerated threat of loss tendency. We request all of you to read AAOIFI's very good governance standard on the Sharia decision-making process. That standard talks about some of the and gives practical examples of some of the psychological tendencies that impact the decision-making processes, particularly the Sharia decision-making process that we are talking about. And here we are saying that this necessity thing should not be done with influenced by the exaggerated threat of loss tendency and should be based on objective analysis. Periodic reviews and renewals, the strategy and the transition plan should be periodically reviewed and renewed. And then we have transparency and disclosure requirements for the relevant stakeholders through disclosure in the annual report, unless otherwise required by the RSA, with regard to the extent of use of conventional insurance arrangement as well as the transition plan to eliminate the same. The SSB, your customer has a right to know, and your stakeholders, your shareholders have a right to know that to what extent you are resorting to the conventional one. So that has to be transparent, and it should and the SSB of the Takaful institution should include a specific opinion in the annual report. There is a new reporting requirements as per AAOIFI, a governance standard on for the Sharia Supervisory Board review and report. So the report format is quite comprehensive, but in case of Takaful, this is specific should be added there, providing that to what extent conventional insurance was used and what are the transition, its comments on the transition plan. The standard was proposed originally to be effective on 1 January 2025. We issued actually the exposure draft in 2024. During 25, we conducted, I think, one public hearing or two public hearings. But since it is being finalized in 2026, maybe its effective date would be 2028 now. 1 January 2027, it would be against our policy. Our policy is that at least 1 year from the issuance date is provided to make any standard applicable. But we would be happy to note if the participants of the public hearing have any comments with regard to the suitability suitability of this effective date. If we change it to 1 January 2028, if you feel more time is needed, please let us know. But just keep in mind that a transition plan will start after the effective date, so there will be still some time. Similarly, if you feel some transitional provisions are needed, we have not written, I think, we have allowed some of the requirements with regard to 14 and 17, retention of risk, etc., through a transition approach on that part. But if you feel there is any other point also which needs a transition provision, please let us know about that. So now I will move back to the comments. I will just move back to the comments now. I think from our part, the standard is completed. So let's move back to the comments. I can see there are several comments. So let's go one by one on the comments. So first, just a second. Okay. Just it's taking full screen. Okay. So the first comment, okay, no, on the paragraph 28, one comment I earlier left for brother for Mohavi Ismail. I think it is this one was the comment was about paragraph 28. Let me just go back. Okay. So you have mentioned that for the paragraph 28 suggests that SSB of the institution should state the reasoning of findings about applying this necessity. Now I understand. So I think, Sister Alia, please make a note of it. The Sharia decision making standard as well as the Sharia Supervisory Board function and operation standard, they require that any decision by the Sharia board should be supported by appropriate reasoning. I think we should create a cross reference of the requirement of SSB of the SSB functions and operations standard as well as the Sharia decision making standard, so that it is clear that the reasoning should be documented with the fatwa. Thank you very much on that. Point is well taken. Then we have, there was earlier one comment by Miftahu Dibaba, but I requested at that time to mention the para number. Now we have comment from Rizwan bin Amara. Thank you, and it's pleasure, and thank you very much for joining in. Brother Muhammad Akub has mentioned in item 26, we will delete the word may. Yes, thank you very much. In no case shall the management exceed. Yeah, thank you very much. This may need to be deleted. Thank you very much. You have a very very good eye. So Sister Alia, please, this may need to be deleted. Thank you very much again, Brother Ko. Faisal Alada, my doctoral dissertation focused on the reinsurance related problems faced by Islamic insurance companies in Turkey and the proposed solutions these issues. It is a study on their appetite of conventional insurance and how takaful practices can be expanded. Some of the solutions are also for takaful institutions. Actually, I think it will contribute to the standard. Highly appreciated, highly appreciated. We will be thankful to you if you can share something for our journal as well. We are highly appreciate your written comments will be appreciated, and if you can make a English version of some part because it's in Turkish. So if you can make an English version for our use in the committee, and also if it can be if it is something, if you can make a shorter version, a summary version for our journal as well, it will be highly appreciated. So, Brother Khwaja Nurul Hassan, you have one point that is for my eyes only, so I'm not mentioning it here, but it will be deleted. So you can forward it to me through email or through WhatsApp, and we can have a discussion offline as well. Okay, with that, we have reached the end. A little bit time is left. So a very quick request, if any of the Brother Arshad, if you want to make any comments towards the end, and if any of the board members or participants want to provide any comment before we conclude. So if you can raise your hands, because a little bit time may be there just before we conclude. Uh, if anybody want to speak up, otherwise I'll pass it on back to Miss Sister Alia. So Sister Alia, I can't see any other question, and can you see any hands raised?
No, brother, not yet.
Okay.
Yeah.
Okay, so then I hand it over back to you for conclusion. Thank you, everybody, for being with us and having this very valuable public hearing session.
Thank you so much, Brother Amar Mustafa Ansari, the Secretary General of AOFI. Before the closing, I would like to request the panelists if we can open the camera so we can have a group photo for the social media. It would be much appreciated. Thank you, Brother Arshad. I'm not sure if any other panelists would like to join us for the group photo.
Maybe we should have taken it in the beginning when Brother Hamza was also there.
Yes. No problem. I can take it from the recording.
Okay, that will be good.
With that, at the end of the session, I would like to thank our partners, the General Council for Islamic Banks and Financial Institutions, SIBAFI, Bahrain Association of Banks, BAB, as well as UAE Banks Federation. Special thanks also goes to all attendees for your participation in this important public hearing. If you still have any comments or suggestions or question, please send it to governors@aofi.com. Please check out our social media and AOFI's website for the upcoming public hearings and events. Thank you. في أمان الله والسلام عليكم ورحمة الله وبركاته.
وعليكم
Thank you
السلام
very
ورحمة الله
much.
وبركاته.
Walaikum assalam.
وعليكم السلام.